With the 2008 Summer Olympics in Beijing rapidly approaching, all eyes will be on China and its economy. China's economy has been heavily investing in United States Treasury notes. Once heralded as the dominant currency accepted around the world, the United States dollar is facing some critical times. With the declining rate of the greenback against other currencies, will China have to rethink its policies regarding its booming economy? This question has caused a series of debates and concerns within the United States itself regarding how the fall of its dollar could affect China's economy. The answer to this question is no, but China will have to plan for the effects that the dollar declining will bring. From a slowing of the economy, to inflation, to a reinvestment of its holdings, China will have to take a hard look at its policies before progressing down a path of financial benefits. However, the outlook for the country is positive. China will, over the course of the next 50 years, undergo a slowing of its economy, experience a rise in inflation, and see exports decrease in the United States. But China will still be prospering, as it will invest in Europe and receive more lucrative trade opportunities with other nations. All of these predictions are a result of the declining dollar. Numerous factors had to be evaluated due to the scope of this topic. These included how the falling dollar would alter the efficiency of the production of various Chinese factories, how the dollar's decline would factor into the government's decision of possibly moving their assets out of the United States, and the dollar's effects on inflation in China as the renminbi, or yuan, rises as the dollar falls. One of the things to factor in for this situation is the comparison of United States prices. On the left, we have a graph showing how U.S. imports, although declining, are costing Americans more. Now, what this means, in terms of China at least, is that American imports coming from China are becoming more costly as the dollar is declining. Fewer Americans will be buying Chinese goods, and therefore China will be forced to look elsewhere for its trading opportunities. Although Americans make up 25% of Chinese trade, China will want to diversify its trading, and certainly the graph on the right also further strengthens this claim, as the declining dollar is contributing to inflation rates in the United States, as well as in Asia, and particularly in China. Labor and raw materials are becoming more expensive as a result, and therefore American consumers are being hit even harder. China, realizing this, will even want to further diversify its trading situation. Another thing to consider is China's 2004 trade records. And this chart, is showing how China's trading is divided up between several different major destinations, in this case countries, and it demonstrates the percentage of the total trade in terms of both exports and imports of that country China is involved in. And by looking at the chart, we see that the United States, Hong Kong, Japan, South Korea, Germany, the Netherlands, and the United Kingdom are the large and major countries that China is involved in. Now, what happens 2 years from now? Well, we have China's 2006 trade records, and those numbers are actually rather smaller than 2004. So what does this actually mean? Well, this means that the United States, Hong Kong, Japan, and South Korea are actually losing trade with China, whereas Germany, the Netherlands are actually gaining trade, along with Singapore. and then the United Kingdom is actually remaining constant. And we can see that on the next graph here, the next data table, where we can see the percentage of change. And it has gone down in the United States, Hong Kong, Japan, and South Korea, and has gone up in Germany, the Netherlands. And the same situation is true for the import side. The same situation, lessening of trade with China's Asian partners in the United States, and increase in European markets. Here we have China's 2007 trade records based upon the commodity in which China is demonstrating. Now, we also have the leading markets in 2007, and you can certainly see that the United States and the three main Asian partners for China are leading. However, despite the declining dollar, China is certainly focusing on other areas, although these regions make up about the United States with 25% of China's trade. We have also the situation with Japan with 12%, and the European Union is slowly coming up with 20% of China's trading. Now, the U.S. dollar effects on Chinese economy, Chinese exports to the United States will decline, and this will promote increased trade among European countries. And as the dollar continues to decline, the renminbi or yuan will strengthen against the U.S. dollar. Now this means that inflation will rise in both China and the United States, and this means that the low-cost factories that are producing cheaper products will be hurt harder, as their raw materials and labor will cost more, and many of those factories will close. But things are still looking up, because China is looking to become more of a major manufacturing center as opposed to the producer of cheap products. Here we have the exchange rate of the renminbi versus the US dollar, and we can see that it has declined steadily from 2003 to just last week in April in 2008. And this certainly is cause for concern for Americans, but for the Chinese, it's also actually helping them with the declining dollar that's opening other regions of the world to China's benefit. So what exactly will happen? Well, over the course of the next 50 years, China will undergo economic growth, although that growth will be slower due to the declining dollar. Also, China's shift in terms of looking for markets will continue, and that will help its growth. While inflation will rise and factories that produce lower-cost products will close as a result, China will have moved beyond being dependent upon those types of companies and will be focusing more energy on companies that are producing higher-value products. China will maintain its lucrative trade with the United States and keep its money in United States Treasury notes despite the dollar's decline, and